Well, Derek, for our investors that maybe have never heard of a SPAC or a special purpose acquisition company, can you maybe shed a little bit of light and maybe give us a definition of what that is?
Yeah, so I think a good place to start is to address why a company would want to go public in the first place. So the reason, like the traditional route of going public involves what's something that's called an initial public offering or IPO, and we talk about those a lot on the show. But basically, when, like you said, when a company goes public, they are looking to raise more money, raise capital for the expansion of the business. And so an IPO is the first time that shares are offered to the general public to be an investor in the company. Not all large companies that we think of are all publicly traded. I'm trying to think. I looked up a list of private companies, and there weren't that many of them, because most of the companies that we interact with day to day. I mean, your local restaurant is not a publicly traded company. It's not traded on the New York Stock Exchange. That's a privately held company. But if like a company like Apple, where you can go out and buy shares of Apple's stock, that's a publicly traded company. But so there's an immense cost with initial public offerings, and then, like you had mentioned before, there's a lot of regulatory red tape, and they can take like 6 months to a year. But the way around that, so in 1993, GKN Securities crafted a template for a company to go public without all of the regulation and all of the I mean, you're basically going into deep waters in a world that you're not familiar with. If you're a technology company, you don't know the ins and outs of Wall Street. So a company might go public via SPAC, or a special purpose acquisition company. And the way that it works...
Say that fast.
Yeah, right. Say that 10 times fast. And the way that it works is usually a company or private equity firm or some sort of investment vehicle will have an initial public offering themselves, and the company will have no operations, like you said, and their only purpose is to be acquired by an actual company that makes a product or sells a service. And so the SPAC will go out and raise money via the IPO. And one thing to note, in the IPO of the SPAC, the investors that are investing in the IPO, they don't know which company that SPAC will go out and merge with. So oftentimes they're called blank check companies. I feel like we're going to get tired of saying SPAC. I feel like I've already said it 50 times.
Blank check company sounds a little bit more, a little easier.
Yeah, right. Yeah, right. But a company might choose a SPAC rather than an IPO because, yeah, you're basically walking hand in hand with an entity that has been through the process, and those will those will typically happen faster than an IPO, and you don't have to do all of the regulatory work. And also, when selling to a SPAC, there's usually a premium being paid for the company compared to a traditional acquisition, so smaller companies can take advantage.
You really have to, if you are, I guess what I look at this from is from an investor's point of view, the retail investor. And why should they care if a company goes public by merging with a SPAC or if they go public on their own? So I see a trend taking place, and I'm going to get into some of these things that may or may not be related, but I think I can piece them together. So you had mentioned it's a blank check company. So investors are coming forth and investing in this SPAC without knowing what other company they're going to merge with, right? And usually that period of time is anywhere from 18 months to 2 years. Usually 2 years is the longest. And then at the end of that 2 years, if they have not found a suitable company for which to merge with, then the investors typically get their money back plus whatever interest is earned. Because when these investors give their money, a lot of times that money is held in an interest-bearing account until they're able to pull the trigger on a company that they find suitable to merge with. And when they do, there's going to be a voting process. So they will vote to see if they want to exactly merge with that company. It's important, like you said, the company that they're looking to bring public, the SPAC is looking to bring public, essentially merges with and into the SPAC.
Right.
And then those investors have the option of swapping shares, or they could also redeem if they wanted to, and then walk away out of that. But the type of people that you find investing in a SPAC, in a blank check company, is Wall Street professionals. They could be hedge funds. They could be CEOs. Richard Branson is somebody who has invested in a SPAC before. The thing that you have to be careful of, there are examples of companies that have gone public through a SPAC and have been highly successful. Now, they're still relatively new. The one that comes to mind is, so far, DraftKings has had a pretty remarkable run as a publicly traded company. They went public through a SPAC. But for each one of those DraftKings that I find, I can also probably find, yes,
yeah, right.
Nikola Motors. And even if you look at, so Virgin Galactic was a company that went through publicly traded for a SPAC, and for a while it did very well.
Isn't that Richard
Shares
Branson's
have fallen.
company? You had mentioned Richard. Yeah,
it is Richard Branson's company. Yep. Shares have fallen from 54 to 23. Open Door is a one that went through. Do you know what Open Door's concept is?
They do reservations, right? Is that reservations?
No, I think this one is. Maybe they do that also, but I know what their technology that they lean on is the ability to sell a home without actually having to physically be in a home, because their technology.
Am I thinking of
allows you to
Open
walk through this
Table?
home.
Are there some?
You might be thinking of
Oh,
Open
okay,
Table.
sorry. Yeah.
Open Door, neat concept,
Right.
right? But shares went from 34 to 18, as you mentioned. Nikola Motors collapsed.
Yeah.
Now, I don't know if that's purely related to going public with a SPAC. I don't think it is. I think it's the company itself. But the point I'm trying to make is, and I have some hypocritical thinking here, and I'm going to talk about that a little bit later. I admit that I'm hypocritical in this. Sometimes the rigors that a company would need to go through to become publicly traded are good for the investor.
Mm.